Last few IPOs have not been good, though Cox and Kings has listed well. DB Corp is closing today. Subscriptions have been slightly more encouraging than the previous few. Girish Agarwal, Non-Executive Director at Dainik Bhaskar, and Anand Shah from Angel, who tracks this company with us now. Morning, gentlemen. Thanks for joining in. Girish, given the presence that you have in multiple states and multiple markets, what kind of advertising revenue growth can you expect going into fiscal year 2011?
See, if you look at the business growth, what we have done in last from 2006 onwards, has been almost 34% CAGR on the advertising growth. Now, going forward, looking at the market, and especially since we are in the IPO process, as per SEBI guideline, I can't give you any forward-looking statement.
Girish, morning. Can you just talk a little bit about circulation growth there and how you see that scaling up for FY10 and 11?
See, if you look at the Indian market again, last 4-5 years time, you know, especially for Bhaskar Group, we've been growing very, very steadily, because we've been growing from our markets, existing markets like Madhya Pradesh, Rajasthan, Punjab and all that. At the same time, we've been entering into new markets. Like we entered Ludhiana, we'll enter Jalandhar, Amritsar in last 2-3 years time. We launched our few more editions in Madhya Pradesh and Rajasthan and Gujarat and all that. So I guess this trend would continue going forward also.
What is your margin outlook, Girish? Because your margins have been quite strong, particularly with reference to how newsprint prices have moved and also the rupee dollar. Do you think you'll be able to hold margins at the current strong levels?
See, if you look at the last 6 months number, April to September, the company, we have done almost 34% margin, EBITDA margin. And, you know, I guess when the business is mature and consolidated, we should be able to, you know, this was the last numbers. And again, as I said, we are just closing today, so I won't be able to give any forward-looking statement.
Can you just outline, though, the exact plan for your radio and internet subs?
See, on the radio business, we operate out of 17 stations. We have 17 station licenses with us, and we launched in 2006 from Jaipur. And most of these stations, what we have, are in the places where we already have a newspaper with us. So the idea is to complement both the medium going forward. And the top line also looks good, and going forward, it looks good for us.
Comparisons with the other listed entity, Jagran is, those comparisons are inevitable, Girish, and that is your key competitor in many markets. How do you see yourself positioned versus Jagran?
First of all, I would like to say me and Jagran competes only in 2 markets, that's Haryana and Punjab, and which is not even 20% for us. While other 80% of the market, we have the local competitor in each market. Like in Gujarat, I have a different competition, Madhya Pradesh or Rajasthan, or in that case Chhattisgarh and all that. So I guess the important thing about us, if you look at right from 1995 till 2009, like in 1995 we were only in 1 state, that's Madhya Pradesh. Today we are in 11 states. So the company, we have launched a state almost practically every 1 year. And in whichever market we have entered, we've been able to become number 1 from the day 1. Like if you look at Jaipur, or you look at Haryana, or Chandigarh, or Jalandhar, Amritsar, or even Gujarat, in all these markets we've been able to really showcase the strength of the company pretty strongly. And I guess that's the strength we have going forward also.
How's the response been so far, Girish, on your IPO? And I know that your anchor investors were allotted shares at the upper end of the band, but have you decided which end you want to price it at?
Not yet. We have not yet decided, but we are very happy with the kind of response we have got from the market. And I think this adds on to our responsibility going forward, because till now we were responsible to our readers, and now we are responsible to our readers as well as the investors also. And our endeavor would be that the way we have been able to live up to the expectations of our readers, we would try our best going forward for the investors also.
For the last many quarters, Girish, vernacular advertising, print advertising in vernacular media has grown far in excess of English language print media. Do you see that trend continuing, or is that beginning to level off a little bit?
Let me explain you why this happened. Because see, if you remember in 80s and 90s, it was all about metros in the country, where almost 60-70% of the sales for most of the companies used to come from metros, and hence people were focusing on the metro English media. In the late 90s and the whole 2000s, suddenly the whole tier 2 and tier 3 cities in the country has really grown up. And that's where the consumption is happening. And fortunately, in all these markets, be it Coimbatore or Visakhapatnam or Ahmedabad or Jaipur or Punjab and all these markets, is the Indian language newspaper, those who are holding the forte there. And I guess for advertiser, that's the way to talk to them. And that's why you're seeing the growth in the Indian language newspaper coming in. And I guess that's the trend going to continue in future also. And if you look at the number in 2003 and 2008, in 2003, out of the print money, almost 60% was going to English. And in 2008, that number has come down to 46. So regional has to grow furthermore.
Wish you luck. Girish, TV Corp closes up today. It has got a pretty good subscription up until now, especially on the QIB side. From the management to the analyst, Anand Shah joins in. Anand, morning. So what's your call on this one?
Good morning, Mitali. We have actually advised our clients to subscribe to this issue. Unlike the most recent IPOs, we have found this IPO is somewhat reasonably priced. And we have arrived at a fair value of around 234 rupees based on a 20 times multiple, similar more or less in line with its peers. So we believe it is reasonably priced and one can subscribe to this issue.
So what are your earnings per share expectations for DB Corp for fiscal 10 and fiscal 11, Anand? We are expecting about 180 crore PAT in about FY10 and that going to about 210 to 212 crores in FY11. So FY11 EPS would come to about 11.7. So there's a significant growth happening from 09, which was a year of consolidation, to FY11, where you will see recovery happening in advertising revenues, as well as newsprint has corrected a lot, so significant margin expansion accruing to the margins, and also prepayment of debt would help to lower interest costs. So that will boost the earnings in the period of 09 to 11. So 11.7 is our EPS estimate for FY11.
And FY10 revenue, you've penciled in at 1,000 crores plus or more or less?
Yeah, I mean from current 950 crores what they did in FY09, we are expecting 1,000 crore plus going to about 1,200 crores in FY11. And that main revenue jump will happen from the ad rate hikes, which will most likely be announced, say, in a period of March to April, as economy has recovered and print media companies are gaining strength in terms of readership and in terms of circulation. So both should happen, rate hike should happen, and new launches will also support DB Corp to grow in terms of revenue.
Any risks at all, Anand, which might threaten your EPS target of nearly 12 rupees for fiscal year 11?
Main risk in terms of print media company remains only two. One is any further slowdown if it happens in GDP growth, which is less likely as per us. And second is volatility in newsprint prices. We have penciled in a growth of about 10% in newsprint prices for the fiscal year 10 and for FY11. And we expect the prices to remain benign in newsprint. The other risk remains in terms of rupee movement. Any rupee depreciation is obviously going to impact them. So these are the main risks. Otherwise, we believe DB Corp is well placed to achieve our target or maybe even surpass it.
Thanks for joining in today, Anand. That's the view from Angel. Subscribe, they say. This is DB Corp. Closes up today.